Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 13th of December 2020, and we're publishing the second episode in a new series of Bitcoin versus gold and silver, a series which will be published each Sunday for the next few months. Now, we appreciate not everyone is interested in Bitcoin, but it is a competitor to gold and silver, and so we seriously suggest you listen to this series so that at least you can appreciate a competitor resource to our much cherished belief in precious metals. So here goes. In episode 1, to which we attach a link below, we explained why we launched this series and highlighted that many of our subscribers have written to us stating that there has never been so much currency printed in the history of the world. There is a global pandemic affecting literally millions of businesses and livelihoods across the planet, and yet gold, although having recently reached an all-time high a couple of months back, is still much lower than many expected, and silver could only muster 3/5 of its previous high. So what's going on? Well, we confirmed there were many reasons for this, and 3 obvious economic reasons included, but not solely limited to: 1, dollar depreciation has not been as great as many anticipated. 2, the printing of vast quantities of money, at least short-term, props up ailing economies and also boosts competitor investment avenues such as stock markets, which are close to and have constantly reached all-time highs in recent months. And 3, inflation has not yet occurred, and some argue deflation seems the most likely short to medium-term economic default position, and gold and silver tends to perform better during inflationary times rather than deflationary. In episode 1, and throughout this series, we're focusing on a potentially competitor product to gold and silver, that is Bitcoin, and to a lesser extent, other cryptocurrencies. We also pointed out that within the investment world, there are many competing products: bonds, equities, treasuries, precious metals, other commodities, cryptocurrencies, fine art, and antiques. And to put this into perspective in terms of value, the equity market is worth about $85 trillion. Gold market is approximately worth $3.7 trillion. But if we're talking about coins and bars and easily realizable gold for conversion into cash, this figure falls to around $1.5 trillion. Total amount of silver ever mined is worth close to $1.2 trillion. But for investment purposes, and again easily convertible into cash, the physical market is only worth around $60 billion. But according to Statista, as of early December 2020, the Bitcoin market capitalization was valued at $350 billion US. That's Bitcoin alone, almost 6 times the silver available for investment and around a quarter of the readily available gold worldwide. With many thousands of cryptocurrencies already out there, just considering the market capitalization of the top 20 alone, of which Bitcoin admittedly is the largest, we're looking at a figure close to $518 billion. Now we have to smile, because no sooner had we published episode 1 last Sunday, a couple of pumpers issued their take on gold and silver versus Bitcoin, and tried to argue to some extent that Bitcoin was not a competitor, and in fact, it has an intrinsic value of 0 and should not even be worth looking at or considering for a moment. Well, we're not fans of Bitcoin. We've pointed that out. But there are 3 points to note. 1, the $518 billion market in Bitcoin and the top 20 cryptocurrencies got its funds from somewhere. And it's reasonable to assume that at least a proportion of it either came from gold and silver sales or would have gone into gold and silver if Bitcoin or cryptos did not exist. Not necessarily all of it, but a proportion of it. 2. They would say that, wouldn't they? Because they have businesses selling you gold and silver. So of course they do not wish to admit that there could be a potential alternative to, or our view, a speculative addition to your investment portfolio. And 3, it cannot be ignored, no matter how much we may wish it to be ignored, because financial advisors are now including cryptos, and especially Bitcoin, into their clients' portfolios. Admittedly, only a small percentage, under the heading of speculative or high risk, but nevertheless, it is happening. So it should not be ignored, or ignored at your peril. So like it or not, Bitcoin is either taking funds that perhaps would have gone into gold and silver, or even receiving funds from the sale of gold and silver, as some investors feel they may have already seen the bulk of any rise going forward. Now, having put forward the arguments as to why Bitcoin should not be ignored, let's now look at how Bitcoin is used and why people are attracted to this investment or speculative asset class, depending on your perspective. What is Bitcoin? Bitcoin, often described as a cryptocurrency, is a virtual currency or a digital currency. It's a type of money that is completely virtual. It's like an online version of cash. You can use it to buy products and services, but so far not many shops accept Bitcoin yet, and some countries have banned it altogether. However, more and more businesses are beginning to adopt and accept it. How does it work? Each Bitcoin is basically a computer file which is stored in a digital wallet app on a smartphone or computer. People can send Bitcoins or parts of one because of its high value to your digital wallet, and you can send Bitcoins to other people. Every single transaction is recorded in a public list called the blockchain. This makes it possible to trace the history of Bitcoins to help stop people from spending coins they do not own or making copies or undoing transactions. How do people get Bitcoins? 3 main ways. 1, you can buy them using real money. 2, you can sell things and let people pay you with Bitcoins. Or 3, they can be created using a computer. This latter one will probably not apply to most of us, because in order for the Bitcoin system to work, people can make their computers process transactions for everybody. The computers are made to work out incredibly difficult sums. Occasionally they are awarded with a Bitcoin for the owner to keep. People set up powerful computers just to try and get Bitcoins. This is what's called mining. But the sums are becoming more and more difficult in order to prevent too many Bitcoins being generated. It is argued that if you started mining now, it could be many years before you actually achieve a single Bitcoin. In other words, you could end up spending more on your electricity, and time certainly, than the Bitcoin would ultimately be worth. Why are Bitcoins valuable? There are lots of things other than money which we consider valuable, like gold, silver and diamonds. Bitcoins are valuable because people are willing to exchange them for real goods and services, and even cash. We shall go more into this in a future episode. Why do people want Bitcoins? Some people like the fact Bitcoin's not controlled by governments or banks, and people can also spend their Bitcoins fairly anonymously. Although all transactions are recorded, nobody would know which account number was yours unless you told them. Is it secure? Which is a question everyone wishes to know. Well, every transaction is recorded publicly, so it's very difficult to copy Bitcoins, make fake ones, or spend ones you don't own. We've said difficult, not impossible. It is possible to lose your Bitcoin wallet, as one of our colleagues did, and we produced a video on this, or delete your Bitcoins and lose them forever. There have also been thefts from websites that let you store your Bitcoins remotely. The value of Bitcoins have gone up and down over the years since it was created in 2009. Its value peaked in 2017, fell back dramatically, but has now more recently reached all-time highs and at the moment is just over $18,000, but it nearly touched 20,000. So that's a very brief 101 about Bitcoin. So what is the fascination and especially the attraction to younger people who, let's be frank about it, as far as the Western world is concerned, are not really that bothered about gold and silver other than in jewelry terms? Well, on July the 30th, 2018, when Bitcoin had fallen back from its all-time highs, CNBC published an article written by Emmy Martin. It was entitled, "Millennials are 5 times as likely as older adults to say Bitcoin is the best way to save for the future." We'll just read you a very small excerpt of that article. Quote, "The future of Bitcoin remains a topic of hot debate, but young people are significantly more likely to trust the cryptocurrency than their older counterparts. That's according to a new survey from Bankrate, which found that 5% of millennials, defined in this case as those aged 18 to 37, say Bitcoin is the best place to put money they won't need for 10 years or more. Only 1.2% of Gen Xers, aged 38 to 53, favor it for long-term savings, and less than 1% of boomers, aged 54 to 72, which I fall into, do." So I'm in the 1% category. Relying on cryptocurrency as your long-term investment vehicle could be a costly mistake, admittedly. Bitcoin has had a rough year back in 2017 to 18. After surging to 20,000 at the end of 17, it fell to less than $6,000 by June of 2018. Some experts, including CEOs and Wall Street heavyweights, say the digital currency has run its course. Berkshire Hathaway's Charlie Munger has called Bitcoin worthless, artificial gold, adding that it's not something I think the world needs, unquote. That's the end of the excerpt from the article. But 2 years later, and Bitcoin is now back again close to all-time highs. So why are these millennials so taken with it? Well, we've sort of summarized that into 6 reasons, though there are many more. 1, it's easy and quick to buy and sell, can be controlled quickly on a smartphone, tablet, laptop, or computer. 2, they like the excitement that one day their investment of, say, $1,000 could be worth $1 million. 3, lack of faith in existing markets, which many claim are manipulated by the larger players. 4, it's new, innovative, and therefore exciting. 5, it's a potential cash alternative easily transferred via smartphones. And 6, millennials have never known a world that wasn't either in the midst of or recovering from economic turmoil. This familiarity with instability has resulted in a lack of faith among millennials in the centralized banking system they've inherited from older generations. This unique relationship with the economy means that the younger generation does not feel compelled or obligated to support a system that they've only ever seen as insufficient. This is one of the root reasons we're seeing so many young people investing in cryptocurrency rather than government bonds or other traditional markets, and especially gold and silver. So, we can see the younger generation beginning to adopt this alternative investment or money asset or platform, and with advisors also jumping on this bandwagon, it's set to continue to grow. Now, there are a number of serious risk factors associated with it other than just price falling, which we shall highlight next week, together with some of the intrinsic characteristics between gold and silver when compared with Bitcoin. What do you think? Please do share your thoughts. Meanwhile, we've provided links below to those recent Bitcoin videos we've produced, and also links to some courses and books on the subject of Bitcoin and cryptocurrencies, should they prove of interest to you. For full transparency, we will earn a small commission if you decide to purchase any of those items. Thank you so much for listening. If you haven't already done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. And also, either later today or tomorrow, we will be publishing a video on the Richard and Greg channel talking about what actually happened vis-a-vis Brexit and the deadline, which is today, of negotiations to determine whether on the 31st of December there will be a deal, an exit deal, or whether we come out on WTO terms. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.